Hello, greetings.
Good morning, everybody.
Good morning.
How are you, Michelle? Good to see you back on another call.
I'm doing great. How are you?
Very good, thank you. All right, guys, we'll give it a couple more minutes, see if anybody else wants to join us. I will tell you that if there was any questions about seasonal slowdown and motivation, it's 10 o'clock. We do these meetings once a month. The last one we had 106 people on. I think we had 85 on by 10 o'clock, and now we have about 5. So you guys are the hustlers that are still working in later November. Hey, Mark, good morning. How are you?
Jason, will we be able to get a copy of this presentation?
Yes, sir. This is being recorded, and it will automatically send out a transcription and the full recording to every participant when we're done.
Awesome. Thank you.
You're welcome, sir. All right, guys, we want to be respectful of your time, but we'll give it another minute or so, and then we'll get going.
Hey, sorry about that.
All good. Mark, how are you?
I'm doing good. I was trying to use my phone to listen in and laptop to visually see y'all. So, but I'm good. How y'all doing?
We're doing good. Did you I know you had some questions on the DPA initially. Anything we can answer for you real quick before we get started?
No, I mean, I've been doing some of the readings on, just the different ins and outs and nuances, but no, just been pitching it, things like that. So I'm just trying to get someone to go with it, So no, I'm good for now. Thank you.
Right on. Anybody else have any questions they'd like to throw out before we get going? Oh, okay. All right. We'll give it a couple more seconds, and then we're going to dive right in, be respectful and mindful of everyone's time. I love Otto being on camera and being in an actual office. I've got Todd who works on my team and Dylan who works on my team. And Mark, looks like you're in an office also. But we did a training for a client on site, and it was just so refreshing because so many people have gotten away from actually going to work. And one of the loan officers that showed up, she was like, well, this gave me an excuse to get out of my pajamas for the day. And it's crazy. I mean, I haven't been in the business for a long time. I miss the days of everybody being in the office. So good to see you guys out there hustling. All right, we're going to dive in. I'll give you a quick overview on what we're going to do. And like I said, we've got a really small group compared to what we normally have. We generally get in excess of 100 people on these training calls that we do on a monthly basis. We've got a smaller group. So guys, if you have questions, literally it's going to be really manageable. Just unmute yourself, ask any questions you may have. We've got an exceptional product. We're going to really just take a moment, tell you about the team that you've got with Orion Lending and our background, really some of the benefits of partnering with Orion, and then we'll dive into the guidelines and give you a quick overview on the guides, and then really how to sell it, how to put these deals together. But like I said, if you have any questions, please ask. There's much more value in an interactive dialogue than me sitting up here rambling on and on about this DPA product. So my name is Jason Twiford. I am your account executive with Orion. On the call with me, I have got Todd Pierce, who works on my team. I've got Dylan Johnson, who works on my team. We all work together. We work real hard to get your files pushed through. So if you have questions, you can reach out to all of us. We're all here to help. That being said, my background, I've been doing wholesale lending for 32 years. Dylan's new with us, but with Todd and I, we have in excess of 60 years of experience in wholesale lending. So it's rare you're going to bring a scenario into us where we're going to scratch our head and say, gosh, we've never seen this before. And we are exceptionally good at figuring out ways to put your deals together and solving problems. I am actually the number 13th ranked account executive by the 2024 Scotsman's Guide. So we do a lot of volume, but we also take a very personalized approach to it. The number 3 FHA producer, which really lends well to helping you with these FHA down payment assistance programs. And some of the benefits to working with us is that we've got our own operations team. So from setup through funding, we've got a dedicated staff where you're going to work, generally speaking, with same underwriter, same account manager, same funder on every file. It allows you to really build some continuity with working with the team and really understanding how we put deals together, what you can expect from the underwriters, how to communicate with the underwriters. And we do really, I mean, the underwriters don't necessarily want to jump on a phone and deal with every condition, but we think there's tremendous value in that. And so we will always facilitate being able to get you on a phone call with the underwriter. We can jump on with you. In a lot of cases, we may not even need to involve an underwriter, but if we do, we can certainly assist with that. Additional perks, we have excellent technology. You've got the ability to really seamlessly track everything that's happening in the system. We've got an exceptional marketing library. We've got 200 plus flyers that incorporate DPA as well as all other products, but we also have just listed, just closed, open house flyers. And we'll touch on some of that and how you can really leverage that to grow your business with the consumer directly, but also to grow your business with realtors. And like I said, we're really going to walk you down the path of how to sell this program and use it to leverage your business and grow your business. Not just, hey, we want to do a DPA loan, but how can I really market this product to be able to grow my business and grow my relationships with realtors? We also allow you to use lender credit to pay your origination fee, which is a very powerful tool as we get into the DPA product specifically, but it is a powerful tool across the board. We do that on VA. We're one of the only lenders that allows you to use lender credit to pay your compensation on a VA transaction if you're going borrower paid, which allows you to charge more than 1% on a VA borrower paid transaction. We're one of the only lenders that allow you to do that. I can use lender credit or seller credit on those VA transactions. Totally separate training. We can get into that later or do a side call if you want to. But that's really the benefit of it. Use this marketing. We've got 200 plus flyers in English and Spanish. A lot of them are very interactive and can be completely customized. They don't say anything about Orion. So without delaying any further, we're going to dive into the product itself. And again, before I do that, anybody have any questions on anything we've touched on? Let me just open up my chat, make sure that we don't miss anything. Okay, so we have 3 distinctly different DPA products. I'm not going to overload you guys and overwhelm you with, this one does this one does that. We're just going to simply talk about what the guidelines are as a whole. And when you've got a client, we are happy to jump on a call with you, really walk you through it and help you put the deal together and figure out which program is going to be the best fit for your particular client and their situation. And I will tell you that I personally, with this team, we close 25 to 35 down payment assistance transactions a month. So when I say we're very well versed on it, we are. And if you bring us a scenario, we will be able to really very effectively guide you and direct you on which program is going to be the best fit for your client. So without any other questions, I'm going to dive into it. So 3 products available. Each product has a couple different programs within it. And again, we can walk you through what the benefit to each program might be for your particular client, but we'll dive into that when you've got a client. Our DPA, let's talk about what our DPA is not first, right? Most DPAs, you start with your buyer pool out here. And DPAs, generally speaking, want first-time buyers. So that narrows it. Then they have income restrictions. then it is credit score restricted, then it is DTI restricted. And you end up taking this population of buyers and you narrow it down to this is who qualifies for most DPA programs. What we like to offer you and your clients is if this is your population of buyers, we want this population of buyers to be eligible for DPA. So our DPA is available FHA, USDA, and conventional. And we've got people from all over the country on this call. We have got, to the best of my knowledge, the only conventional nationwide DPA program that exists. A lot of people have some FHA or a variation of it. Some people have USDA, but we've got the full menu of products. In addition to that, we go down to a 600 credit score. Your client does not need to be a first-time home buyer. And most of our DPA products have no income limits whatsoever. So while we have taken that population of buyers and most DPAs have narrowed it down, we have given you the ability to continue to offer this DPA to every one of your clients. They could own a home, high income earners, lower credit score transactions, all of them fit our DPA parameters. Because we are so aggressive with that and no overlays on DTI. So if you've got an FHA transaction, we go to a 47 front end, 57 back end with a US approval. On a conventional, we can go to 50% with a US approval. So no overlays whatsoever with respect to DTI. Because we've taken this approach, we also allow you to use non-occupant co-signers on our DPA programs. And any questions, comments, or clarification anyone would like at this point?
Yeah, just a quick question. All this stuff, Jason, that you're talking about, is this all going to be, is it all available on the website when we look things up?
Yes, sir. So when you look it up, you'll see that if you go into the matrices, we will have 3 different product matrices. All of them are available to you to take a look at. I'll pull up the quick pricer in a bit. You'll see that we can price FHA, USDA, or conventional, all in the system. So yes, all of these resources should be available to you at your fingertips.
Excellent. I'm just not a great note taker, but I'm good at looking things up. That's why.
If you're good at looking things up, we can, in the course of this call, jump in and show you exactly where to look that information up. So Otto, thank you for jumping in and asking that question. As far as programs, we have everything. I have got repayable product, which pays a significant lender credit. We have got forgivable product, which is a silent second. And we have grant programs that are literally forgiven at the close of escrow. That is an exceptional product. Literally on a $500,000 purchase, if we do this as an FHA down payment assistance, we're going to give your client $17,500 at the close. Day one, they have that amount of equity in the property. There's no recorded lien. There is no payback. There is no, I'll say, we don't handcuff them to the property, the loan, the transaction for any long period of time. They've got to make 6 payments on the loan to get you out of your EPO period, and then you can refi them. It's the only product in the marketplace that will allow you to streamline out of a DPA product. All other DPA products, every one of my competitors that offers DPA has a recorded lien. Whether it is a silent second or a repayable second, there's a recorded lien that will not subordinate. So we're giving you an added level of flexibility that does not exist outside of Orion Lending in the marketplace. And most of these products will take you to 100% CLTV or higher to give you some money for closing costs. In addition to that, we will allow you to select a rate. We don't give you the single rate option like a lot of our competitors do, where, for example, your DPA rate is 7.25. We're going to give you pricing from 6.5 up to 8.25, and you select whatever interest rate is going to be the best fit and provide the best credit or cost potentially to be able to get your client closed. This product is available SFR, PUD, condo, and we will do FHA spot approvals or single unit project approvals if you've got an FHA condo complex, or if you've got a complex that's not FHA approved. It's available up to 2 to 4 units and manufactured homes. And we will do manual underwrites on this. We keep referring to, we will follow AUS, and we do follow AUS, but we also give you the flexibility to do manual underwrites down to a 600 credit score on this program. This product is available conforming loan amounts as well as high balance if you're in a high balance area. And this next bullet point, if you were going to write down anything, this would be one of the items I would write down. We still have DPA products available for permanent and non-permanent resident aliens. So if you're familiar with FHA guidance in May of 2025, they eliminated FHA financing for non-permanent resident aliens, including DACA borrowers. So because we offer this conventional product, we still can take non-permanent resident aliens, including DACA borrowers, up to 100% financing with our DPA. Exceptional product to be able to go market for your clients. And one of the benefits to really working with us, we've specialized in down payment assistance. We are incredibly good at it, but we're also very efficient with it. And, I'll refer to past trainings. I'll refer to scenarios that we've put together to kind of hammer home some of these points. We did this training yesterday, and I asked somebody, who's closed DPA recently? And one of the guys raised his hand, and I said, how did it go? And he said, it was bumpy and it was long, right? Because a lot of these DPAs partner with the city, county, state, and here, Evan, is FHA for DPA DACA or conventional only, Evan? A lot of the DPAs partner, like in California, where we are primarily, once it gets cleared, it's got to go to the state of California. Their turn time on review is 2 weeks. So you've got an automatic 2-week ad on every transaction that you're trying to close with the state of California. Our DPA products, we wrote the guides, we underwrite them, we fund them, and we service them. So we give you that start to finish path to be able to close quickly. We just closed a DPA in 11 days, closed another one in 10 days, and the quickest we've closed one is 8 days. So our ability to close DPA product is exceptional. And this is our program. So we don't partner necessarily with anyone, and we certainly don't partner with anyone that needs to review your file prior to us funding the loan. The programs follow standard agency guides. So seller credit becomes a very critical component to structuring some of these DPA transactions. Conventional, and we do conventional both Fannie and Freddie. So if you've got that client that's self-employed that wants to qualify using 1 year of tax returns, we've got the DPA product for you. We'll put them Freddie Mac. Conventional allows a 3% seller credit. FHA allows a 6% seller credit. We give you the option for lender-paid transactions on our DPA, and we offer temporary buy-downs. So you can do a 2-1 or 1-0 buy-down on our DPA programs. And I will tell you, that is a very quick overview on the DPA product in a nutshell. So let me just open it up for a minute. Does anybody have any questions on kind of the guideline aspect of it, how we qualify a client, what we do? Let me just open it up to the group here and see what we've got.
How in qualifying is it similar to Cal HFA? I've got experience in that. I don't have experience in yours.
Okay, so you're Otto, obviously you're in California. Similar but different, right? So Cal HFA has additional overlays and requirements. They've got DTI restrictions that they'll only go to 48 or 50 depending on the scenario. We follow the actual guideline. So we follow the 4001 if you're trying to put together an FHA. We follow either the Fannie or the Freddie seller servicer guide on a conventional transaction. So there would be no additional. Now we do have one overlay for reserves on one of the programs, but the majority of the products literally just follow agency guides to a T. If your client qualifies for the FHA or conventional loan, then they would qualify for our DPA product. Okay, and then Mark, let me make sure I nail your question here. So on the 10-year forgivable, Is the second prorated to pay back over a few years? What if they refi? Can they roll the difference in equity in year 2, 3, 7? So the way that our forgivable works, it's not a 10-year forgivable. One of our products is forgiven after 3 years. The other product is forgiven after 5 years. And unfortunately, it's not prorated. So if they were to refi in 2 years, let's say it's that $500,000 sales price. There's a second for $17,500. If they refied in 1 year, they pay back the $17,500. If they refi in 3 years, they pay back the $17,500. If they refied in 4 years, they would pay back the $17,500, which is honestly why I'm not a huge fan of the forgivable, because we're in an interest rate that now there have been times in the market cycles where the forgivable was an exceptional product, but I don't think it's an amazing product right now. And you kind of hit the nail on the head. One of our products, they're handcuffed to that first mortgage. So they've got to keep that first trust deed at an elevated interest rate for 3 to 5 years before that second is forgiven. It won't subordinate. So you can't streamline, you can't get them out of it. We're in arguably what's going to become a downward interest rate environment. And these people are going to want to streamline, or they're going to want to refi. And if they refi, they're going to end up paying the second back. Now, they do get some nominal seller credit, but if you're going to end up paying the second back, and I'll pull the pricing up in just a minute, but if you're going to end up paying me that second back, let me give you a significant amount of lender credit. In fact, let me share my screen with you, and I'll show you what I'm talking about right now. Now, you should all be able to see the pricing that I've pulled up on the screen, correct? I'll take that as a yes. So this is just how quick and efficient our pricing engine is. You input some basic information, hit the run quick pricer, and I don't like to give you guys a pie in the sky transaction with a 780 credit score and a 23% DTI. I want to give you real world. This is a deal that we close almost every single day. 680 credit score, 57% DTI on an FHA down payment assistance transaction. And what you're going to see, this is our Boost, which is one of our most popular products, repayable second. And the reason this is such a hot product is even on a moderate credit score with maxed out DTI, I can get you in the sixes paying roughly 1.25. If I take you up to 699, I'm getting you very close to 2%. At 7.25, I'm paying 2.75 in lender credit. This is in addition to the 3.5% for the down payment. So in this case, we're giving your client upwards of 7% in total assistance to help them close escrow. So the repayable product is very popular for that reason. Now, let me give you a comparison. Here is the same Boost on a forgivable. 7.25 is paying roughly 1/4 point, right? But they're going to have to keep this loan at 7.25 for 60 payments on the first before that second is going to be forgiven. And let me give you an alternative. If we flip over here, this is our Elevate Grant program. And what I did not want to do was overload you with a whole bunch of names, but to just tell you about the grant. The grant is the money that is literally forgiven at the close of escrow. That 7.25 rate is at about a 3/4 point cost. Now, this pricing does improve if the credit score improves. This pricing does improve if the DTI goes down to 45% or below. It is possible to get lender credit on the grant program also, but you've got to have a more qualified buyer. But what we're looking at specifically is the difference between the forgivable and the grant. And what you're looking at 7.25, here you're at a 3/4 point cost. On the grant program, you're at about a 1/4 point in credit. So we're looking at a 1% difference between the forgivable product and the grant. I would say let's really work hard to try to get some additional seller credit to cover that 1%, because the grant is forgiven day one and you're able to streamline that product. I'm going to stop sharing for just a moment. but I want to make sure you guys really understand how powerful that grant program is. The forgivable is nice. It's a silent second. It doesn't impact the DTI. You can get a little bit of lender credit, but odds are your client is going to end up refinancing within that 5-year period of time, and they're going to pay me back. So let's do one of two things that's going to put your client in a much better situation. Either A, if we know they're going to pay us back, let's put them on the repayable, because I'm going to give them $15,000 in credit to help with closing costs. Or let's squeeze a little money out of the seller and put them on the grant where that money is forgiven, and you're going to get them out of that higher interest rate after they make 6 payments. So, Mark, did that answer your question?
It did, yeah. I've had a few questions around the repayable piece that I've pitched the product to, and I just wanted to make sure I was getting my facts correct, you know.
So with a grant program, with a forgivable program, you might ask yourself, the client may say, well, why do I want this repayable? Because that repayable is going to give them a significant amount of lender credit. And I will tell you, we have structured transactions for clients where we have, within the last couple of weeks, refunded the EMD back to the buyer. We have refunded the EMD back to the buyer on a transaction we closed not long ago. We refunded the cost of the appraisal, and we prepaid 90 days worth of HOA dues. It's all based on how we structure it from the onset and how much seller credit we can get. So I will tell you, I will say, regardless of what state you're in, regardless of the time of year and what prorations look like, we would estimate total closing costs to be somewhere between 4 and 5%. And that's going to cover title, escrow, all of your prepaids, and loan officer compensation. Now, we can go lender paid on some of these products, and we have enough lender credit to be able to go lender paid, cover your comp in full, and still provide some credit to the buyer. So the question becomes, and this is really one of the first questions we're going to ask when we're trying to help you structure your transaction, is, of this 4 to 5%, how much money does the borrower have? And in some cases, these borrowers have money. Some cases, they're scraping together. This transaction where we refunded the EMD, we had a buyer that was not planning on moving and purchasing a home. They were renting a home. They were given a 60-day notice because the landlord wanted to sell property. So they were very unexpectedly put in a situation where they had to buy. And I will tell you this absolute factual information. This buyer contacted a couple realtors. They had $3,000 in the bank. That was the extent of their assets. $3,000. They bought a $520,000 home, and they needed a $5,000 EMD. They didn't even have enough money to cover their EMD. They had to borrow $2,000 from a family member and borrow money. And, you know, probably shouldn't be telling you all this, but we're going to be real with you guys. They had to pay the family member back after the close of escrow. So it was imperative that we were able to get some of that EMD money, if not all of it, refunded at the close. So we worked with the loan officer. We penciled out what the numbers were going to look like. They needed about 5%. They had no money. They needed a 5% seller credit. The beauty of our market right now, it is shifting from this crazy seller's market to being more of a buyer's market. And homes are starting to sit. So when you see homes starting to sit for 15, 30, 45, 60 days, those sellers are willing to entertain offers. You know, if this was COVID time and you asked for a 5% seller credit, I mean, your offer would have ended up in the trash can immediately. But they got the 5% seller credit, and we closed that transaction. And this family was ecstatic that they didn't have to go rent. They actually owned a home. And I sat down with the loan officer after we closed, and we had a conversation about this. And I said, this buyer, how did you end up getting this buyer? He jumped on one of these trainings, and we're going to talk about shooting some videos and promoting this momentarily. He put a video out, and this buyer happened to see his video on social media because they were searching for down payment assistance. And when the buyer called this guy, he said, yes, I can help you. And who is our typical down payment assistance buyer? We get most of these buyers have decent credit. They're in this 660, 680 plus credit score range. Most of them have good jobs and good income, and the DTI fits. But the piece that's missing is they don't have down payment. Life has gotten really expensive. So Otto, you're in California. In California, you take a family that's earning $100,000. At one point, a family that was making $100,000 was living very comfortably. Now, that family is living paycheck to paycheck, probably kind of scraping by. And if you ask that family to be able to save up $30,000 or $40,000 to cover their down payment and their closing costs, they're never going to buy a house. There was a study done that said the path to home ownership for most young buyers, most young kids, and I got 5 kids, all in college, the path for most kids in that age range to buy a house is either an inheritance from a deceased family member or a gift from a family member. And that's it. Right? They don't have the ability to save. And I'm just going to do these. So Kirby, open for co-hosting a webinar. Absolutely. The webinar, the training we did in person yesterday was for a huge Century 21 office with one loan officer that showed up that had access to this whole group. So we will absolutely do it. If you're in Southern California, we'll be happy to jump in and do it in person with you. I got to be careful when I say that because we had a heck of a long drive yesterday that I wasn't anticipating. So I called Dylan, we're going on a field trip, and I asked him to drive so I could grind out some work. So thanks again, Dylan, for being the driver. But yes, Kirby, we will absolutely jump on Zooms. For you, we've done first-time homebuyer seminars where we'll partner with you on that. Arizona, I don't know. Dylan, are we up for the drive? Arizona may not be much farther than we did yesterday going into the valley, but we will absolutely help you with that. But what I will tell you is, in my conversation with this loan officer, so you want to talk about the power of being able to advertise a product like this. I said, did this buyer end up with going to other realtors before they talked to you? 3 realtors and 2 loan officers that this buyer spoke to. All of them told him the same thing. I can't help you. You need to save money or get a gift before we can go out and show you properties and put you under contract. And this is a buyer that we closed escrow on last month that is enjoying living in their own home that they own. And that loan officer got a commission check that all these other people passed on. And that loan officer referred that buyer to a realtor that he had been trying to do some business with and wasn't really getting any traction. You take a buyer in, and now that realtor got a commission from this guy bringing the buyer to him. I guarantee that is a relationship that is now pretty solid. And it all came from somebody jumping on a training just like this. So I will tell you guys, and we'll walk through it. We're going to walk you through exactly how to go sell this to the consumer and sell this to your realtor partners, especially somebody that you haven't worked with. So great question, Mark. Thank you for that. Any other questions that we can answer on guidelines? And then we'll kind of talk about how to go sell this. All right. So how do we sell it? Really, it's kind of a twofold approach. And it's all predicated on one word, in my opinion, right? If you're talking about home buyers, right? The consumer, and I'll ask somebody to unmute themselves. If you were to summarize in one word what the buyer's perception and belief of down payment assistance is, what is that word? Anybody? Otto, you've been asking questions. I'm just going to come to you. What do you think the buyer's belief of DPA is? What is their benefit?
Well, the 2 I get are free money or not really sure it's believable.
But free money, free. And one person in every training says free money. And I will tell you, when you look at our grant program, and thank you, Otto, for jumping in, you hit the nail on the head. You absolutely crushed it. The buyer's perception of down payment assistance is they're getting something for free. Now, we are industry professionals. We know that, well, you may be taking a higher interest rate. There may be a repayment on a second or a silent second that holds you hostage from being able to refi. Like, there's some trade-off. But if the buyer's perception of DPA is free money, don't you think that's the product you want to advertise? Let me ask you this. If you told realtors, hey, I'm the best loan officer that you'll ever talk to, how many of them are going to call you? Probably not many, right? Thank you, Otto. I have the best Fannie product and Freddie product and FHA products and underwriting available in the marketplace. But they're not going to call. The same with the consumer. I'm the best loan officer you're ever going to work with. Call me right away. No one's calling. You advertise down payment assistance and free money, you will get your phone to ring. And I will tell you, out of 10 phone calls you get on down payment assistance, there may only be 2 or 3 people that actually need DPA. But you've got well-qualified buyers that think they're going to get something for free, so they're going to call. And at the end of the day, if you get a buyer that calls you, people are, I mean, I would, not many people on camera, but I would bet there's 2 or 3 people on this call right now who are paying to get leads, or they're paying for Zillow leads, or they're buying some kind of trigger lead. We can get you leads for free, and we can get your phone to blow up with well-qualified buyers who think they're going to get something for free. And when you explain to them how the DPA works, they may realize, well, you know what? I'd rather do, put my own, take money out of my 401k and put 3 or 3.5% down, or I've got money in the bank and I thought maybe I could keep it in the bank, but it makes more sense to put it down. But it opens up that dialogue for you to connect with these buyers and to be able to dive into this. And at the end of the day, that's what we want. So literally, we have had countless partners, loan officers, that have generated business from being able to put together a quick video. And I don't know how many of you are on social media, if you're on Instagram or TikTok or Facebook, or you're just word of mouth with your realtor offices. But if you put together a quick video, the guy that pulled in that buyer that had $3,000 did a quick video that said, hey, if you're interested in buying a house and you're limited on funds, I've got down payment assistance programs where I can help you close escrow with literally no money out of pocket. And something as simple as that generated this phone call that got him paid on a commission 2+ weeks ago. But let's talk about an even more powerful opportunity. Otto, I know you're in California. There are some pockets where we're still seeing full price offers, maybe multiple offers coming in, but for the most part, we've seen the real estate market shift to where homes are starting to sit, and they're sitting for 30, 45, 60 days. And when a home starts to sit like that, sellers get very nervous and realtors get very nervous. So let me walk you through this scenario. And we have been very successful in helping facilitate and create partnerships with new realtor relationships, selling listings, moving product. I would ask your realtor partners, and if you like, Otto's been great. I'm gonna just keep picking on Otto. If Otto is my realtor and I'm a loan officer, I'm gonna go to Otto and I'm gonna say, Otto, I know you've got 3 or 4 listings. Have you had any of those listings that have been sitting for more than 30 days? And I'll be Otto in this case. Yeah, I've got this one. It's out in San Bernardino. It's sitting. My seller's getting really leery. Oh, Otto, what's the game plan? Well, the seller's ready to drop the price. Okay, perfect. That is exactly what we want to hear. Because we sat in an office with a whole bunch of C21 agents yesterday, and I asked the same question, and one guy raised his hand, and I said, how long has it been on the market? 45 days. What's your seller's position right now? They're ready to drop the price. Okay, 525 listing. What are you looking to drop the price to? $499. I said, you're going to drop that price $26,000 on a $500,000 purchase. That is 5%. I said, guys, why is 5% a really material number in our conversation? And if any of you reflect back, we said it takes about 4 to 5% in credit to cover all closing costs, title, escrow, and prepaids. We're creating a scenario where we could potentially refund the EMD back to the borrower. And we don't want to overpromise that and underdeliver, but that is now something that it instantly clicked, that in that scenario, I said, okay, so let's role play this. I'm your loan officer. I'm going to come to you and I'm going to say, Otto, instead of you dropping the price by $26,000, why don't you and I sit at an open house this weekend? And Otto may say, you know what, I want to sit home and watch the Laker game, and I don't really feel like sitting at an open house. Okay, Otto, would you mind if I sit at an open house for you this weekend in that property? Okay, no realtor is ever going to turn down you being willing to give up your weekend to go sit at an open house and do their work for them. And yep, Todd's jumping on Kirby's question. So maybe Otto is interested, maybe Otto isn't. But I would say, Otto, I'd like to do a quick video. And that's a nice property. It's been recently updated. So I'm going to do a quick video. And instead of you doing that price reduction, I want to take that money and I want to turn it into seller credit. Your seller is going to net the exact same amount. Do you have any problems with the way that I want to pitch this? And 9 times out of 10, they're going to say absolutely not. As long as my seller gets what my seller is planning to get, how we piece this together, we don't really care. So I said, Otto, let's jump in here. We're going to stand together and we're going to talk about this quick video. And I've had deals go into escrow with this very video. Hey, home buyers, we're doing an open house this weekend at 123 Main Street out in San Bernardino. Guys, we have got an amazing opportunity for you. We have a down payment assistance program that's going to cover your entire down payment. And we have got a motivated seller that is going to pay all of your closing costs. Guys, come by the open house, and I guarantee you we could put you in this home and close escrow with no money out of pocket at the end of the day. And that's it, the 20-second reel. And then Otto, I'm going to create some open house flyers and I'm going to co-brand them, and it's going to have your picture on it with all of your contact info, and it's going to have my picture with my contact info. And we have got amazing marketing material available where literally I could go in and do open houses or open house flyers for Otto, which was in actuality you guys doing these flyers, where you can literally co-brand them with your realtor partner. You input the address and it's going to auto-populate all of the data from MLS into your flyer. You don't have to go take pictures. You don't have to cut and paste. It will pull the pictures. You select which picture. You can consolidate the text into exactly what you want it to be. You could put together a co-branded down payment assistance flyer on this particular program. All you need is a buyer that's going to walk in the door and come and take a look at it. And I will tell you, again, with absolute certainty, we have put transactions in escrow and closed them in this exact format with loan officers who were able to partner with new realtors, go direct to the consumer. However you want to structure it, we've got the ability to really help you put this together. So let me just open it up real quick. I mean, it's like we're drinking out of a fire hose right now. There was a lot of information in a very short period of time. What do you guys want to talk about? Come on, guys. You're taking the time
Hey,
here.
Jason, I had a quick question.
Yes, Mark.
I was talking to a colleague of mine, so it's kind of off subject, but revolving around the grant, right?
Yes.
As long as there's 6 payments made afterwards, could you refi at the market rate, or how does that work?
Absolutely. Right. There's no, this is part of the reason I love the grant. So
Streamline or?
yes, streamline. So if you go, the grant's available conventional also. So if you go conventional, you just do a rate and term refi after 6 payments. If you go FHA, you could absolutely do an FHA streamline. And one of the things I mentioned early in the call was we underwrite this, we fund it, and we service it. So as you talk about streamlines, we want to give you a path to get a buyer into a home, but we know that this is an elevated interest rate and this is a Band-Aid loan. So we also want to partner with you on how you're going to get your client out of this transaction. So if they take a repayable or a forgivable, they've got to wait 12 months, new appraised value, and they do a rate and term refi at 97.75 or whatever LTV we end up needing. But how we want to partner with you on the exit strategy is if you bring this loan back to us, number one, we should be servicing it. So we're going to waive your underwriting fee. It's going to save your client $600 to $1,000 or $1,100 right in just underwriting fee right off the bat. No questions asked. You bring it back, we waive the fee. And that's on any program that we do, not just DPA. Any loan you bring back to us, we will waive your underwriting fee because we value the partnership we have with you. But the critical piece of this, we're servicing this loan. So you know when you get a payoff demand and it says, here's your principal, your interest, your demand fee, all the BS fees they plug in, and then it identifies the amount of money that is in your impound account being held for taxes and insurance. And at this LTV, every one of these loans is impounded. So what generally happens is they pay the loan off in full, and then that $6,000 or $8,000 or $10,000 in the impound account is refunded back to the borrower at the within 30 days of that loan being paid off. Well, because we service this loan, I will subtract what is in the impound account from the payoff. So on streamlines specifically, so as we, it's been a while since some of us may have done streamlines, right? There's a formula, there's a maximum loan amount. You don't get to roll costs and fees in. So the fact that I'm willing to reduce the payoff amount is an absolute game changer when you look at doing streamlines and paying off this product. So excellent question, Mark. We can absolutely help you with getting your client out of this transaction. Now, if you take the loan somewhere else, we're not going to waive the impound account. You're going to be stuck. So there is a huge benefit to partnering with us on getting your client out of this, but we will absolutely do it. You can streamline them.
Okay, love that. Thank you.
You're welcome, sir. Otto, you have an exceptional question coming. I feel it.
No, not exceptional. So it sounded like what you were saying, really what we should focus on is the first and the third of the three products, right? Either the grant money or the first product, which
in my opinion, and based on I look at it like, I look at every one of these clients. If this was my son, which of these loans makes the most sense, right? We get paid the same on them. There's no benefit to us to steer you in any particular direction. It's simply, how can we most effectively benefit your client? And to pull it back up, yes, you are absolutely right. The boost repayable is going to give you the significant lender credit. So where we see the best application of this product is the client that's got very limited funds, right? They're the guy that comes in with $5,000 and that's all the money that they have available. And we can't get a 5% seller credit. We get a 2% seller credit. This is the optimal program because here, I mean, at 7.25%, you could literally go lender paid, regardless of what your compensation plan is with us, and most likely still have some credit available. Or you could go borrower paid, charge 2%. I'll use my lender credit to pay your 2%, and they still get 3/4 of a point toward closing costs. Or you could take them to a higher interest rate if we need to. But yes, this first program provides so much available lender credit that we're huge fans. We have a 5% repayable, which is going to give your client 1.5 toward closing costs. So you have a 5% second. We still do a 96.5% first. So of this 5%, 3.5 would be allocated for the down payment, 1.5 toward closing costs. And if you gave them a rate at 7.25%, you'd pick up another 1.7. So literally on the 5% repayable, we would cover down payment, and at an interest rate of 7.25%, you could give them another 3% toward closing costs. So I think the repayable is a really, really viable product. The forgivable, I don't discourage people from taking it. I just want to make sure they're educated and they understand that this isn't going to be forgiven for 5 years. And if they refi in that 5-year window, they're going to pay it back. So at 7.25%, I'm either going to give you $1,200 or I'm going to give you $13,500. And if you're going to pay me back, I'd rather give you $13,000. But yes, and then Otto, you're exactly correct. I think the grant, and we offer the grant in two different fashions. So the 3.5% grant covers the entire down payment. Money's forgiven at the close of escrow. You may have a client that doesn't need that much, and we have great options. I've got a 2% grant, $500,000 purchase. They get almost $10,000 in free money, and I can now get them down, using that same 7.25% rate. They're going to get 3/4 of a point toward closing costs. So it's not that I don't like the forgivable product. I feel like it's not in the client's greatest benefit. Now that we still do some of them, if they don't have the money to come in with, it is what it is. It is a silent second, so there's no implication and no impact with the DTI. So there's a really strong workaround in that respect. But yeah, you can have any one of those products, all of them. Don't need to be a first-time home buyer, no income limits. You get to pick which product is the best fit for your borrower.
that I'll write down, those three things that you just said. Those are excellent. Not first-time home buyer. That's very good. Yeah.
Yeah, no, thank you very much. Jonathan Samuels, great to see you on the call, sir.
You got it, my friend.
Okay, guys, Any other questions anybody may have?
I have a question, Jason. Hi, this is Annalise.
Yes, ma'am.
So for this DPA program, do they still have to take a DPA class?
So most of these would have some type of down payment assistance class that would be required. But the classes are available and we can certainly help you with those. They're all available online. It's not going to be some cumbersome class, and most of them are free.
Okay, perfect.
And
Thank you.
if you jump into our guidelines, you can absolutely we provide all of the links. And if you have any questions, just shoot us a call or a message, and we're happy to direct you to the appropriate class for your particular client.
Okay, thank you so much.
You're very welcome. And Evan, you are absolutely correct. That's somebody who's actually used this product with us. And I mean, I could give you a scenario where the forgivable made sense, but those are very few and far between. It's somebody where they don't have an adequate seller credit. The DTI is maxed out. They can't include the payment on the second. But again, those are very few and far between. I think the repayable or the grant are really the two sweet spots for putting your client into a very good situation.
Yeah.
Yeah.
Jason, I came in here on the late freight. What is the maximum DTI on that product?
So Jonathan, we follow AUS. So it's available conventional and conventional USDA and FHA. I'll tell you 99% of the business goes conventional or FHA. So on both programs, we simply follow AUS. You get a DU approval at a 47.57 on FHA or a 50% conventional, we accept it. No overlays there whatsoever.
No overlays, gotcha. Okay, thank you.
You're welcome, sir. Okay, guys, any other questions, any scenarios? Anything else you want to talk about? Anything unrelated you want to talk about since we're all on the call together? Okay.
It was excellent. Very good.
Okay, guys, listen, we want to partner with you and we want to help you grow your business. I will tell you with absolute certainty, we've got about 5,000 of your peers, 5,000 loan officers in our CRM. And we've literally had scenarios where we are the best priced lender in Loan Sifter. And if we send out a quick blast to all 5,000 people, we get about 2 responses with people just saying like, that's great, good for you. We had a DSCR transaction that was uploaded on Monday and funded on a Friday. And literally we thought that was amazing, exceptional. And we advertised that. And we had 3 people say, congratulations, good for you. We advertised this down payment assistance program. And because, like Otto said, the consumer's perception is free money. I know that you as loan officers are getting asked this question on a regular basis. Tell me about DPA. I want DPA. When we advertise DPA, we need to make sure we are readily available at our computers and our phones because we are going to get the phone to ring. Market this product. Like I want a free roadmap to getting your phone to ring. Market this program because you will get a response on it. So thank you all for jumping on. We'll hang out. If anybody has any questions they'd like to ask, we're happy to be here and listen. But feel free to give us a call, and we'd love to partner with you and help you close more business and grow your business.
Excellent. Thanks so much.
Okay, and if anybody needs credentials, email us. We just need your name, email, phone number, and NMLS number, and we'll get you all dialed in with credentials.
Hello. So if I need DPA material for social media, do we need to contact you, or we can get it from the website?
You can get it directly from the website. You can save items as PDFs. You can save items as JPEGs for your social media. It is all available to you without even giving us a phone call. We just need to make sure that we've got your credentials, Frank.
Yeah, I did.
Okay, perfect. I know. Yeah, I thought we just got you set up within the last day or two. So thank you.
Yeah.
And we'll get you all squared away.
Yeah.
Okay.
Yeah, Jason, I can find the matrix for this program on your website, correct?
Yes, sir.
Right?
And Jonathan,
Okay.
I know you did jump on a little later. If
Yes,
there's
I did,
any
yeah.
hey, what questions can we answer for you?
Well, first of all, I did come. I just saw the email just today. But yeah, the question I wanted to want to answer is because of course we all come across first time home buyers in particular that have no money.
Yes.
And in this program, you were showing me the example at the 7.25% rate. Okay. I saw the rebate like 2.7 or whatever. Okay. Credit that can go toward the closing costs. But you were saying that program, that's a first and a second, correct?
Yes, sir.
Using that scenario. Okay.
Yes.
And the first was a 96.5% at the 7.25, correct?
Yes, sir.
Okay. And then you were mentioning, I saw the credit, but you mentioned there was an additional 3%. I want to get
So
that.
you can get up to, I'll pull it back up.
Okay.
So the first, you're spot on, 96.5% first.
Mhm.
You've got a 3.5% second, which is going to cover the entire down payment.
Gotcha.
And then you have the ability to price at whatever rate would provide the additional credit you need. So,
Got it.
like I said, for example, we looked at 7.25, which is paying 2.7. If you got up to 7.75, now you're generating an additional 3.5. That's where you would have 7% in total credit or total assistance for your buyer. And then that second, this is a repayable second, so they would make a payment on it. The loan amount is 3.5% of the sales price. The note rate is 2% above the rate you select for the first. So if you lock them in at 7.25, the second will be 9.25. And the nice piece about our seconds here on the Boost program, they're 15-year terms, not 10. So it gives them a slight payment relief.
Okay. So amortized over 15 years in that Boost program. Gotcha.
Yes, sir.
Okay.
So that would be 180 months instead of 120.
Okay, right. That's the most important thing right there. Gotcha. Okay, wonderful. Okay, I understand that. Great. And now, I'm understanding, what would you say would be your greatest advantage over, say, someone going Cal Halfa? For example, I know Cal Halfa works with the first time home buyers, of course, pretty much.
Cal Halfa, and again, we have an exceptional DPA. I'm a firm believer in that, and I stand behind it. Cal Halfa is another great program, to be honest. I would prefer that we offered Cal Halfa because then I would have everything. So I would look at what Cal Halfa will do their zip, their second, their third. Where I think we really shine in comparison to Cal Halfa is we don't require your client to be a first-time home buyer. And I have no income limits, and I go to lower credit scores, and I have more expanded DTI. But if you had a client that fit the parameters for Cal Halfa, they may have a better option than we do. But again, you look at like the Dream for All, they ran out of money in 9 days the first time. Then they really got overly restrictive on the second go around. And it's an equity share where, Cal Halfa is going to take 20% of any appreciation in the property.
Exactly.
I don't think loan officers and realtors really understood that product very well. And I don't think they explained it effectively in a lot of cases, because we're starting to see some of those buyers come back around and want to refi. And when they don't realize they've got a big chunk of this money going back to the state of California. So again, I don't have anything negative to say about Cal Halfa's program. I mean, it's more cumbersome. It's not as user-friendly. It's not processed as efficiently. I mean, we close these in 10 to 15 days routinely, and you will never close a Cal Halfa deal.
The way they calculate income also is different, is unique. So that may be a niche also.
Yes.
I try to understand those niches. And the reason why, Jason, is because, when I talk to the realtors, they're asking me questions and I need to have the answers, that's my niche, so to speak here. Okay. Having those answers and knowing where I'm going to send that customer, because no two products are perfect for everyone. So you want to know which product's going to fit which borrower. Exactly.
100%. And most of the borrowers that end up with us don't fit Cal Halfa.
Right. Gotcha.
For one reason or another. DTI is too high, the credit score is too low. So,
right.
But hey, we're right here in Rancho. So
Right here, local. There you go.
We got. I live in Rancho, and we have an office right off of Foothill, right behind Mimi's Cafe.
Gotcha. Okay, wonderful, Jason. I will be reaching out, guaranteed. Yeah. No, thank you.
Okay, wonderful.
Okay, guys. I'm gonna exit stage left, and I'll talk to you soon, Jason.
Thank you for joining us.
Okay.
All right, guys. I think maybe some of the other people are have already exited stage left. And
Yeah, I got a question for you, Jason, real quick.
Oh, Kirby, you're
Yes,
still
sir.
there. Excellent. All right, sir.
Yes, my question was on your DSCR loan. Do you require? I got a client that's looking to do a DSCR, but the house is listed right now.
Okay, so we need them to take it off the market. We are going to require a prepay, but we do have the ability to close a transaction on a recently listed property.
How long it needs to be off the market?
But 1 day.
1 day?
Yes, sir.
And what's your prepay?
I believe one of our products requires a minimum 2-year prepay. The other program that we offer requires a 3-year prepay.
3-year prepay. Okay. All right, cool. Now, okay. I'll tell my manager to get it submitted to you then.
Excellent.
All
well,
right.
that would
Thank
be
you,
fantastic, Kirby. Thank you for joining us. And yes, we are absolutely willing to jump on and do a training for your realtor partners.
Yeah, I'm looking at doing. I'm gonna look at doing my camera would be on, but I ain't got it set up. But I'm looking at doing a webinar, trying to set up a webinar with you. I will get with you on some dates that fits your schedule, and so we can, I could possibly get a webinar going for the realtors.
That we would love that, and I think.
But I'd like to
get
on the call with you to see how your flow goes with the realtors.
Okay. Excellent.
Realtor. So you pretty much got a realtor specific model.
We do it very similar to this. We kind of tone down some of the the DTI and the LTV and the acronyms, and we talk more about which buyers we can help qualify, and then we really talk about how to go market it and sell it and do the open houses. And you get the realtors, and it's like, okay, how many of you guys have had a listing that's sitting there for 45 days and you've got a seller that's starting to get a little nervous, and somebody's going to raise their hand.
Okay.
On that question. And then we just talk them through, like, here's how we can help you. We, go do this open house. Kirby's going to come in, he can bring some marketing collateral for you. And we can help you put those flyers together. So yeah, we've got it. It's like I said, it's going to be very similar to what we did today, but it is definitely geared more toward realtors without so much specifics. We're not going to be talking about lender paid comp and borrower paid comp, but more so how we can help them close escrow for buyers that are very limited with the amount of funds that they have.
Okay. All right, cool. Sound like a winner to me. Shoot, I'm ready.
All right, Kirby, I love it. Let's put this together.
Thank you so much, sir. You
got it, Kirby. Thank you.
All right.
Okay. Anybody else still with us that might have a question? We're down to Rico and Evan.
Hi, Jason. It's Rico. Just wanted to say thanks for sending me this invite. A lot of knowledgeable stuff. I'm pretty new to the industry myself. Still looking to pop my cherry. But I do have a couple clients who are looking for some down payment assistance. So their income average is pretty good. They only have about $9,000 cash that'll be coming from a gift that they'll be able to use for the whole transaction.
Okay.
So I think this is something that should be able to work for them.
This is the perfect product for that buyer. And I will tell you, you're with a mortgage doctor. You're with the right team. I mean, Tom, your whole team up there are rock stars, and they have used this product quite a bit. So Desiree just hit me up. She's like, hey, I've read the guides. I want to make sure that this and this works. And I mean, it's like, literally, I was like, you know what, Desiree, it's so nice and refreshing to actually have somebody that's read the guides before they ask a question. Not that we don't want to take the questions, but just when we see our partners really diving in, I will tell you, you have an exceptional team that you're working with up there in Central California. And I'm assuming you're up in Central California somewhere?
Yeah, here in Modesto.
Okay, and you are in a perfect market for this product. So as weird as it might sound, we want to help you pop your cherry and help you put some of these deals together. But yeah, your timing was perfect. I'm glad you had the opportunity to jump on, and get as much information. And if you want to jump on a follow-up call, we're happy to do that. You could call myself, Todd, Dylan. We're all here to help.
Okay, that sounds good, guys. I really appreciate it. I'm gonna try to get some things together on them, and then yeah, I sent the email to Team Twiford for the credentials. So I'll be looking out for that and getting it set up.
Okay, we will get your credentials locked in. Todd's handling it right now.
Sweet, right on, guys. Thank you so much. I appreciate it.
You got it. Thank you.
All right, bye bye.
Take care. Have a great day.
You too.
All right, let's end it, and then we'll jump on